Hello and welcome to this week's edition of Mortgage Watch. I'm Ilan Awerbuch with Unitrust Mortgage in San Diego, California. Well, earlier this week, another shoe dropped in the continuing financial saga of the United States. I don't say the other shoe dropped because there's lots of feet being held to the fire right now. But another shoe did drop, a big shoe. And that's when the federal government, the Treasury Department, intervened and basically took over the ownership of Fannie Mae and Freddie Mac, the two semi-government agencies that end up packaging most of the home loans in the United States. When the government stepped in and did that, it did that because Fannie and Freddie are having a very, very hard time with their own capital. The loans that they're packaging are not at risk, simply their own assets. It's like any other manufacturing company. Fannie and Freddie are in the business of taking in loans and repackaging them into giant securities and putting them out for investors. So just like the cars and trucks that General Motors makes are still good and available and everything else, the loan packages that Fannie Mae and Freddie Mac put out are still good and strong. The companies themselves were really lagging though, and pressure from foreign governments is what caused the Treasury to act. It's interesting that, again, our government needed prodding from abroad to really take some kind of action. The immediate results were somewhat predictable, but still surprising, in that the price of mortgage paper, that is interest rates, went way down, really dropped to their lowest level in 3 years. Unfortunately, that hasn't really stayed with us. It was good for the first day or two, but by yesterday, rates started creeping back up, and today they did again. And that's because there are still other underlying problems in the market. So even though it's a welcome move and a great move and stabilize the market, it is not all the fix that we need. As we've been saying, and I've been saying for months, the government should have probably stepped in and done this 3, 4, 5 months ago and would have avoided a lot of pain in the meantime. Another thing that's going on is that this week there was some good news, in that yesterday Carl Schiller, who is involved with putting out the Case-Shiller Price Index, had some good news about housing prices. They do a nationwide analysis, and it's used by a lot of companies and a lot of players, of where housing prices are at. He says that housing prices in 8 of the 20 major markets have actually started to come around and go up a little bit. So that's really good news. And that could mean that we may have hit bottom. Now, we probably will be at bottom for quite a while, and the increases are modest, but it's still good news. It's better than housing prices plunging. If we look nationwide, again, it's not a free fall. Some markets have been very hurt, but in most places it's been fairly orderly, and even though it's been a decline, it follows 5 years of straight upward prices, which have been, just an amazing amount of appreciation. Another Wall Street firm is in trouble, and that's Lehman Brothers. Again, the government is waiting till the very end before they step in. Now, the government's not going to buy Lehman Brothers. The government's going to broker a deal just like we had with Bear Stearns. So they're going to find someone to buy them, take them over. The government's kind of going to make it a good deal for them, and they're going to step out. Lehman Brothers probably has about $30 billion of commercial real estate paper. It's not all worthless, but again, the problem is these companies are not banks. They don't take in money from depositors. So they don't have a source of capital. They have to bring in capital to keep the company going. And Lehman Brothers waited way too late and was way too overconfident, just like Bear Stearns, that nothing could touch them and they wouldn't be hurt. So because of that, they waited till the last minute. Their value is plunging, and a deal is going to be brokered. So someone's going to step in. It'll all kind of be okay in the long run. I just really suggest that these companies make moves early on. But the same egotism that drove these companies to be so greedy is driving them to think that they're going to remain alive, and actually they're doing themselves a lot of damage. They would have gotten a lot better price for that company 5 or 6 months ago, even a month ago. Now they're at rock bottom, and the people who are the shareholders and the employees who own a lot of shares of these companies, they're taking it in the shorts. Fannie Freddie employees who own a lot of the stock, they've been really harmed. And so I don't think these plans make sense where companies wait till it's way too late, but this is the nature of business. It's hard to admit that it's time to move on and kind of change things around and live to fight another day in a new structure. Another little side note is that Bear Stearns just settled a $27 million lawsuit. They were actually kind of found guilty of intentionally increasing fees to some of their borrowers when they were making their loan payments. So they were overcharging fees for everything involved with their borrowers. They pled guilty. They settled the lawsuit for $27 million. It's not a criminal act. It's a civil act. So they're not being indicted or anything like that. But they did pay $27 million. For the near future, we look for stocks to remain strong. We believe that this turnaround is going to have a good effect here in coming months. We think that Fannie and Freddie are going to be revitalized, even though the share value of the company has been harmed, which actually has affected a lot of community banks. A lot of local banks in the United States own shares in Fannie and Freddie, and as those shares have plummeted, those banks' income has plummeted, and a lot of them will be showing a loss. No one has been bailed out, and no one has been saved. Anyone who made an investment in Fannie Freddie is just facing the market factors for that loss of value. But the fact that the government stepped in and is guaranteeing at least the debt, that is the loan packages that Fannie and Freddie are making, this is good news, and this strengthens the value of those packages and will continue foreign governments and foreign entities and companies buying up this debt, as well as hopefully getting American investors off of the sidelines. So we think there's generally good news on the horizon, and hopefully it'll continue. With that, I wish you all a great week. This is Ilan Awerbuch with Unitrust Mortgage in San Diego. Thanks for attending this week's version of Mortgage Watch.